In this presentation, we will create an invoice for inventory, linking it to a billable expense in order to help us to populate and know what type of inventory we are charging. In other words, we started this process off with a purchase order for a particular customer, a custom purchase order for a custom guitar, in our case, the type of inventory. We then paid for that guitar with a check, linking that check to the purchase order and putting in place that we want it to be a billable item so that we now create the invoice, and that will help us to populate the invoice, or at least to know which guitar we're talking about, give us a reminder in terms of how to start to populate that invoice. We will enter this into QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We are in essence just going to create an invoice, but we're going to be able to go through that process and see how we've linked that invoice to the purchase order as we go. So to see that, let's first take a look at the drop down up top. We're taking a look basically at the vendor section first, because this is where we went through the process. We purchased a custom purchase guitar from the vendor. We did that with a purchase order. We said, hey, here's the purchase order. We would like a custom guitar for a particular vendor. This one being to Epiphone. We said, hey, Epiphone, our vendor, we need this custom guitar for our customer, which is going to be Eric Music. And then when we got the guitar, we wrote a check. We wrote the check for that guitar, and we wrote on the check, or we indicated that we want to make that check billable, or that expense billable. Not a perfect method, but a method that can at least help us to link the check to the invoice. This will help us populate the invoice. Again, not perfect, but it's going to give us an indication. The QuickBooks On Ground, QuickBooks Desktop, QuickBooks Pro has a similar linking feature, but it works a little bit differently. So we're going to have to do a bit of a workaround to get that same kind of information to pull over. So we're going to close this out. If we want to see this from a different perspective, we can go to the expenses on the left side. We're looking here for the Epiphone. So if we go to the expenses tab up top, we'll see all of the information. We see this purchase order from Epiphone. Then we made the payment for that purchase order. This is the check that we made. If we select that check, then we see the check here. Scrolling down to the item, we'll see that we made it billable. So we made the item billable. We will now use that information to help us create an invoice for Eric Music. So we purchased this guitar specifically for this customer. Now we're going to bill the customer. We're going to invoice the customer. So we'll close this back out. We're going to create an invoice now. We'll go to the plus item up top, and we'll go to the customer section. We're going to select the invoice. So we'll invoice, and we're going to type in the customer. We can select the drop down. It's going to be Eric Music, and or type in Eric Music. So there we have it. We're going to select that and tab. And you'll note to the right now we have this add to. We've got this information for the billable information. So we could open that up and it'll take us back to that check, but we're just going to add it. So we're going to say we're going to add that. And there it is. So we've added it. We'll scroll down. We'll take a look at it. The rest of the detail of the invoice is similar to prior invoices we have made. We could email up top for different types of payment formats. We have the billable information. We're going to keep the terms at 30. The date of the we'll keep at January 25th. The due date then, 30 days later, according to our terms, in February 24th. No shipping information. If we go down to the product, then we have the product information. Note it pulled over the ELP, the Epiphone Les Paul. However, it pulled it over as an expense. So this isn't a perfect system. You can see the link here that it pulled it over, but it pulled it over as an expense. Or in other words, more specifically, it pulled over the cost as it would if we had to pay for some type of cost and bill that cost to the customer. We're billing for something we paid for. What we want to do is, of course, put it on the invoice at the sales price. So we really need to change the rate then to have it at the sales price. This will be a good reminder to tell us, oh, Eric Music, we sold a guitar. This is the one we have. That's the particular guitar, but it's pulling over the cost, not the sales price. To change that, we could just go to the second tab and type in ELP so that we know which guitar we're talking about. It's the ELP. It's 500. Now we could keep that one and delete the top one, but this one has the link. So what we're going to do is go up top and change this to 500, and that's what the sales price is going to be. So then I'm going to delete this one underneath. I'm going to close that back out, and that's going to be kind of our workaround to link the invoice to the bill. We can say we wrote the check, we wrote it for Eric Music, we went from the purchase order for Eric Music, the customer, we bought it from Epiphone for Eric Music, we then wrote the check, following it through, saying it's going to be billable to that customer, Eric Music. We then link the invoice so that we can see that particular guitar and link it through to the purchase order and check. However, we do have to make that change and make sure that we're charging the retail price and not the cost price if we use this method. Then we've got the sales tax down below. The sales tax we're going to change. It's going to be by region as it has in the past. Selecting that item, we're going to make it 5% for a standard kind of generic problem. So we will override. We're going to make it 5%. And then we will confirm the override and say that it's just because other. That's why we're doing it, QuickBooks, and confirm and override and close. So there we have it. Let's consider the invoice now, what the invoice will do. Note up top now we have this linked item. So if we select that link, you can see what was used to create this. So we can close that out. Note what the invoice will do. An invoice means accounts receivable is going to go up. That's what the invoice means. The accounts receivable is going to go up by what's due, what we expect to receive in the mail, that $525. That's what it will go up by. The other side of the sales side of the receivable is sales, is income, is revenue. It won't go up by how much we expect to receive, however, $525, but by the amount that we earned, the revenue, what we charged, the $500. The difference, $25, sales tax. We need to even out by putting that somewhere. Where's that going to go on the financial statements? Sales tax payable, something we owe. It's a liability account. And then the other side of this is going to be the cost of the inventory. Inventory goes down because we're giving up inventory. And so inventory account, asset account goes down by the cost, which we saw was $400, even though it's no longer on the invoice. It's there. It's known by the fact that we're selling an ELP. The item will show QuickBooks that, and the related expense called cost of goods sold will go up, bringing net income down. So let's record this and check that out. So we're going to go ahead and save and close. And then we will check that out by going to the reports on the left side. And we'll then check out the balance sheet, look at the balance sheet, and we will scroll up, changing those date ranges from 01/01/19 to 12/31/19. That's January through December 2019, and run that report. Scrolling down, then we see accounts receivable. It should have going up. So let's select accounts receivable. It is going up by, I believe this is the invoice we just did. So there it is, the $525. And if we select that, the $525 for that invoice is going to be the sales price, the whole thing. So let's close that back out. That looks proper. Scrolling back up, back to the report summary. Now let's look at the income statement, which has the other side, the profit and loss. We're going to do that by making a new tab. I'm going to right click on this tab, duplicate it. I'm going to pull this one to the right because that's the one that's going to be called balance sheet. And then now we'll make the profit and loss. So we're going to make reports. We'll go down below a profit and loss report. We'll change the dates once again from 01/01/19 to 12/31/19, January through December 2019, and run that report. Up top, then we have the sales. We're looking for sales items. We'll select the 1,690 in the sales items, and then we sold this time the Eric Music. This one, 500. We only see the 500 now. If we look at that invoice again, that's our sales price. So that's our sales price, not the full amount. If we close that back out, go back to our report, the difference between the two is in the sales tax. If we go back to the balance sheet, the sales tax then is a liability account. Sales tax is going to be in here in the New York department. Wouldn't be called New York department, of course, if we're in a different location, but wherever the sales tax we have to pay goes, that's where QuickBooks will put it. So I won't go in there, it'll be included in there. The other side then of this transaction is inventory going down. So if we scroll up to inventory, here's the inventory account. Selecting that inventory account, it will be going down by the amount or the cost of the inventory. I believe it was this one that we sold to. It's going down by the 400. So if we select that item, we of course don't see the 400 on here. It was on there before, but we changed it to the correct rate. So it's not on this report, but it's driven by the forms. It knows that number. Closing that back out. The other side will be on the profit and loss. If we go back to the profit and loss, go to the cost of goods sold line, Then we should see the other side for that 400. Here's the Eric Music 400 cost of goods sold. If we select that item, then we're going to see that invoice once again. For more accounting information and accounting courses, visit our website at accountinginstruction.info.